U.S. stocks kicked off the first day of the fourth quarter on a sour note, with the Dow tumbling more than 100 points in early trading as investors react to a tired bull market being dragged down further by worries about global growth, ongoing protests in Hong Kong and angst over October's reputation as a scary month for stocks. As of 11:35 a.m. ET, the Dow Jones Industrial Average is off 0.9%, a 162-point plunge, while the S&P 500 is down 0.7% and the Nasdaq composite is 1% lower. The bull is just a wee bit exhausted, says Edward Yardeni, President and Chief Investment Strategist at Yardeni Research. He adds the market is no longer cheap, and with fresh risks on the horizon, investors are taking a time out and waiting to see how third quarter earnings season plays out in coming weeks. Concerns about the health of the global economy continue to weigh on Wall Street, as does the uncertainty surrounding how the Hong Kong protests will play out, Yardeni says. On Tuesday, the latest reading on Eurozone manufacturing fell for the fifth straight month, and a key manufacturing index in Germany slipped below 50, which signals contraction, for the first time since June 2013, according to Barclays. Adding to the angst was a weaker-than-expected ISM manufacturing report for September in the U.S. The problems suggest a challenging earnings environment due to overseas concerns, says Yardeni. Any signals that the U.S. economy may not be able to offset weakness in the rest of the world raises questions about the profit outlook. Europe seems to be weighing more and more on the bull. Wall Street is also closely monitoring the protests in Hong Kong, the latest geopolitical risk to weigh on markets and curb investor risk-taking. While the market has been able to shrug off global flare-ups in Ukraine, Iraq and now China, there's always a risk that one of these flashpoints will cause the market to rethink its bullish tone. Geopolitics have yet to hurt the bull so far, but that's not to say one of these events won't morph into a real threat to the market, Yardeni says. Benchmarks in Hong Kong and mainland China are closed for the next 2 days because of holidays. However, Japan's Nikkei 225 index declined 0.5%. European stocks are being hammered. The FTSE in Britain is off 0.9%, with the German DAX down 0.9% and the CAC 40 of France 1.1% lower. On Tuesday the Dow closed down 28.29 points, or 0.17%. The S&P 500 closed down 5.49 points, or 0.28%. The Nasdaq composite shed 0.28%.